Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show with Kirby Atwell on real estate investing through veteran housing. I'm Dan Breslin, host of the REI Diamond Show. This is our 70th episode, and we've brought back one of our most popular guests to date, as rated by the number of downloads, Mr. Kirby Atwell. Kirby began his real estate investing career while serving in the U.S. Army before founding Eye Candy Homes, where he specialized in high-end real estate renovations and flips. And more recently, Kirby founded Green Vet Homes and is focusing on using sustainable building products and providing high-quality, affordable housing to veterans in the south suburbs of Chicago. Let's jump right into it. All right, welcome back to the show, Kirby. How have you been?
Great. It's great to be back on the show. Thanks.
Absolutely. And for the listeners that are just checking in and meeting Kirby Atwell for the first time, I will include a link to Kirby's first interview with us talking about flipping luxury homes. I'm sure we'll touch on some of that a little bit in this episode, but we kind of have a different focus planned, but just to get a little bit of the history. So, Kirby, why don't we start off just kind of talk about where your investing business has evolved to these days and what occupies your time in the real estate business now?
Sure, yeah. Since the last interview that we did, life has evolved quite a bit. The business has evolved quite a bit. Just to recap for people who didn't hear the previous interview, so I got into real estate about 5 years ago and, got into it full time about 5 years ago. I actually got into it about 10 years ago, part-time when I was serving in the Army. Got out of the Army 5 years ago, and that's when I started a company called Eye Candy Homes. And I started that with two partners, two long-term friends, John and Janelle Swersinski. And we grew that business for 4 years. And so that's what I talked about on the last show was what we were doing inside that business. And it was flipping more north side of Chicago, luxury type properties. Just recently here in the last 4 months, we decided that, we just had different visions of where we're heading in the future. And so John and Janelle continued on with Eye Candy and that business model. And I decided to start my own company. So I sold my portion of the company. We owned it three ways, and I sold my portion to John and Janelle, and I started Green Vet Homes. It's my new company. Its primary focus on buying rental properties in the south suburbs of Chicago and renting them to homeless vets through this VA program. It's called BASH. It's offered through the VA through partnership with HUD, and it's kind of like a Section 8 voucher. It's a voucher program, but it's for veterans in high need. So vets who have been in the VA hospital for a couple of years and are getting out and don't have a place to live and don't have a job, because they were in there for some major medical issues, or vets who have just fallen on some hard times and need to get back up on their feet. So they get this voucher, and then they can rent the property. So once I heard about this program, it really interested me because I really enjoy working with other vets and kind of know where they're coming from. And it was also, it can be a profitable way to run a business too. So it was kind of the best of both worlds. And so I kind of jumped in head first into that.
It's a pretty big transformation. So are you doing any flipping at all? I mean, other than obviously you're doing construction, I think, to these houses for the veterans, right, Kirby?
Yeah, that's right. So that's a good point. I still do some wholesaling and some flipping just to pay the bills. Because, when you're buying rental properties, you're accumulating properties that might have, a couple $100 a month in cash flow after all your expenses and set asides, but that's not enough to really, pay your bills in the beginning. So my target right now, so after I left Eye Candy, my goal was to really limit my overhead and keep my expenses, personal and business expenses, really low so that I could have some more flexibility to do some of these rental properties. And so if I get one wholesale or one flip a month and one of these rental properties per month to add to the portfolio, that's sustainable for me. It pays, on the active side, the wholesale or flip pays my bills, and then I'm just continuing to build a portfolio on the rental side.
How many of these veteran homes have you stood up so far?
I'm at 4 right now. So my target was 1 a month, and I'm right on track for that. So that's where I'm at.
So obviously you and I talk, we're friends outside of coming on the podcast here, and I know about your business and you know about mine since we're both here in Chicago operating, similar side-by-side businesses and kind of meeting in the living room, as it were, on some deals.
Yeah.
So you told me about, this Green Vet Homes and the Veteran Project. And then the next thing you know, I don't know if this was like a buzzword people were talking about before and I just didn't pay attention to it until you had said something, but is this like a relatively new program? Has this program stepped up? Is this different from a couple other programs that might be out there for veterans? I mean, can you just talk about that market as a whole of, what knowledge you've discovered as you started to research and then enter this market, Kirby?
Yeah, that's a great question. And it has kind of sprung up over the last couple of years because I think it has a lot to do with the fact that we were involved in a major war for 10 years and the veteran force or the military forces were built up really big and a lot of people were sent to war. And so now you've got a lot of veterans who have left the military, whether they chose to or they just downsized their position, and they're back in the civilian world. And it's a really tough transition for a lot of people, especially people who have been in combat and might be dealing with some PTSD issues. So the rate of veteran homelessness, veteran homelessness has always been something that has been an issue, but it's gone up quite a bit since, we got involved with Iraq and Afghanistan. So the VA and HUD and a lot of other organizations too, but those are two of the biggest, have taken on a couple of new programs like this VASH program. And there's a few others that people have told me about since I started getting into this. And they've tried to tackle it. And it actually has been very effective. The rate of veteran homelessness has declined quite a bit just in the last 5 years here. So I was talking to the lady that runs the VASH program, and she said that it's down pretty substantially, but there's still I think it's about 600 to 700 vouchers for veterans offered through the VA here in Chicago. So it's not like an enormous number, but it's mostly for the people with the highest need.
Is this like the Section 8 program? From what I understand, I've never tried to get on the program myself, but I hear that it takes the applicants like several years of a wait list, and sometimes the money runs out and all that kind of stuff. Has that been the experience for the veterans who are getting into the VASH program? I mean, is that like a longer onboarding process than Section 8, a similar onboarding process, or is that like a little bit more streamlined because it's a newer program? It's kind of serving like a little bit of a different niche, let's say, than Section 8.
Yeah, it is more streamlined, and that's one of the things that I really like about it as well, which, surprisingly, because the VA isn't known for having less red tape than other government organizations, but they do a good job with this. I don't know as far as the onboarding process for the veteran. I think I know there is a waiting list, but I think if the need is there, they try to find a way to help the veteran if they qualify for it. And I don't know, again, all of the qualifications, but it's designed for homeless vets to get them off the street. And so the majority are 1 and 2 bedroom vouchers. It's a lot of single or married veterans with no kids. But from a landlord's perspective, I like it because with the Section 8, so you'll market your property, you'll show it to tenants. Once you get the moving papers from the tenant, they give it to the landlord. You fill out the moving papers, you turn it back in. They have to process it for a week. Then they set up a inspection like a week or 2 later. Then the results have to come back a couple weeks later. And then finally they say, okay, this is what we'll give you for rent. So it is, it can take a month to 2 months to get a tenant in there and get them paying. So with this VA program, they streamlined it because the idea is that, these vets really need it. They're living on the street, so they want to get them into a house as quickly as possible. So a rep from the VASH program itself, from the VA, will come out and they'll do a pre-inspection, which, as long as all the major aspects pass on the property, they'll let the veteran move in, and then the inspection company can come out after they move in and do the actual inspection. So, they can get in there right away, and it helps the tenant, it helps the landlord. So all around it, it's kind of a better process.
Are you doing any kind of screening of the vet themselves as the business owner / landlord here, the way you would if you were, say, accepting a Section 8 tenant? Are you doing any kind of application process, things of that nature?
Yeah, they say it's the same as Section 8 or renting to market. They say you should screen the same way that you would any other tenant. So it's not like that you're obligated to accept any tenant that has this voucher. I wouldn't say it's the exact same as a market tenant because, obviously they're probably not going to have a job, or maybe they just lined up a new job. Their credit's probably not going to be the greatest. So, you're going to have to accept a little bit more risk on these properties. And I'm not naive to think that I'm not going to experience issues with some of the tenants. So far, I haven't. So far, it's been fantastic that the tenants are super happy to have a place. And, I try to go a little above and beyond and when I'm renovating it to make it a little bit nicer than I would absolutely have to, just, to show them that I care about them and hopefully they'll respect the place because of it. And it's going to last a little bit longer if you put the quality in too. But they also, the VA also pays a little bit more than market rent. It's the same rates as Section 8. And typically Section 8 is going to pay a little bit above market because you are taking on a little bit more risk or a riskier tenant typically with the voucher holder. So, I can't do a home walkthrough before I rent it to somebody, which is something that I would do if it was a market tenant because they don't have a home. They're a lot of times they're living out of their car or a friend's basement or whatever. So, you've got to accept a little bit more risk, but there can be more upside also.
You just touched briefly on the product, and that's something I had here written as one of the things I wanted to ask. I guess I have a couple questions. So the first one is the product. Like, you have done some of the nicest rehabs that I've certainly been through physically in the $1 million segment. So just how nice is the property that you're providing for the vets? I mean, can you just kind of describe like a quick bullet point of the renovation quality, finishes, etc., of, let's say, the average house that you've done so far?
Yeah, so I'm buying them, like I said, in the south suburbs. My perfect property is in either Country Club Hills or Hazel Crest or South Holland or, one of those areas in the south suburbs. And in those areas, for some reason, the rates are a little bit higher than some of the other towns around there. I'm buying typically like 1,000 square foot, 3-bedroom, 1-bath ranch on a slab, no basement. So I don't have the maintenance concerns of flooded basements and that sort of thing. Just a very straightforward cookie cutter type of house. Usually there's a 1-car attached garage and it's very low maintenance type of place. And so I'm targeting the ones that are either foreclosures or estate sales that, they're structurally, most of these houses around here in the south suburbs, if you go into the city of Chicago, you're buying a 100-year-old house and you got all the problems that come with a 100-year-old house. But a lot of the properties that are built around this area, because I live in Frankfurt, which isn't too far from there, they're like 1970, maybe late 60s. Some are even newer than that. So, mechanically, structurally, there's nothing wrong with them. So I'll come in and do basically replace all the finishes. So I usually need to replace the cabinets, countertop, paint everything, new carpet, new tile, new fixtures in the bathroom. And I'm putting in nothing overly fancy. Sometimes I will put in granite if it's a small countertop. Sometimes I do just put in the laminate countertops, just a typical appliance package, whether it's usually I don't put in stainless in a rental. Usually it's white, but sometimes I did in one property, I put in stainless. It was in Oak Lawn, one that I did for a veteran, and it's just a little bit higher end area. So at some point, if I do sell it, that's what I would want to have in there anyway. So the price difference between these items are not that substantial, and to make it really feel like a home for somebody, something that they can be proud of, I think goes a long way for them taking care of the property.
You mentioned that it was typically a 1 or 2 bedroom voucher, but you mentioned that your bread and butter property is a 3-1. Are you finding vets that have a 3-bed voucher to fill those properties, or are you accepting a 2-bed voucher? And if so, what difference, if any, in rent are you having to accommodate for the change?
Yeah, so I told the lady that runs, I communicate pretty regularly with the lady that runs the BASH program, and I told her, if I've got a 3-bedroom, I'm going to buy it in a way that, for a price that works for a 2-bedroom tenant. If I'm buying it in the right area and I'm buying the right property, it would work for a 2-bedroom tenant. So I'm willing to rent to a 2-bedroom. So far, the 3 bedrooms that I've bought, the last 2 I've rented to, it was a single mother with 2 kids that had a 3-bedroom voucher. So I've been fortunate to get the few 3-bedroom voucher tenants that in my 3-bedroom properties, but the rental amounts are decent enough to where the 2 bedrooms will cover it. And the prices in these south suburban areas just have not recovered at all. Like, it's kind of crazy. The price point that you can buy a 1,000 square foot house that needs very minimal work. I mean, I'm targeting usually around like the $40,000 all in price point. And, you can't build that same house for anywhere close to that. It's going to be 3 times that to build the same house. So you're getting them at such a huge discount, and then, you're renting them over $1,000. They're somewhere that BASH will pay. Just depends on the zip code that you're in, but it's going to be over $1,000 for a 2 or 3 bedroom voucher. It's going to be probably closer to $1,500 bucks. So, you can do the math there. The taxes in the south suburban areas are pretty high. So I think that's also why they increase the voucher amount, because they have to compensate for the taxes. But, there's a lot of landlords out there that will not rent to these voucher holders. I had a female veteran call me the other day that needed a 3-bedroom place. This girl that I just rented one to, and she said that she called tons of landlords and they all turned her away. They're not comfortable with it. They hear homeless vet and they think the worst. They think drug problems or they're going to destroy my place or whatever. So that's why VA will pay a little bit more to, I think, incentivize landlords to accept some of these potential risks that are there. But again, that hasn't been my experience so far. It's been pretty quality tenants, and I think one of the major things that I try to do is just make sure that I treat the tenants like I know who my tenants are, and eventually you'll get to a point where you've got so many units that you can't have quite the personal connection with your tenants, but I communicate with them regularly. I'm very proactive on stuff. I treat them with respect, and I also share a similar background. They're veterans as well. We went through the same type of training, and so there's that rapport there, and I feel like there's a level of respect for the unit and for me as the landlord, because that's what I give to them to start with. I give them that respect to start with.
Got it. And for listeners who may not be familiar with Hazel Crest, South Holland, Country Club Hills, you gave us the $40,000 all-in price point, but can you give us a few examples of the property taxes per year that you're paying in those areas, Kirby?
Yeah, I try to target $4,000 and below, which is actually a challenge. Seems crazy that on a $40,000 house, the taxes are going to be 10% of the purchase price, but $4,000 is like low taxes. So I've looked at properties that are $40,000 or less that have $6,000 taxes. So you really got to pay attention to those taxes. I challenge every property tax that as soon as I buy it, I've got an attorney that goes in and he challenges it for me, and he charges a third of whatever he reduces it for 1 year. So if he drops the taxes to $3,000, he gets $1,000 for doing that. And so a lot of these were assessed, several years ago, and they just were never reassessed, and there was never a sale on the property. So now, they're being sold at a pretty big discount to what they were valued at before, or there's issues with the property that's causing them to be sold so cheap. So you've got a pretty good case for reducing the taxes on them. So I always make sure the numbers work with the taxes that I'm buying it for, but then if I can get a bonus by reducing the taxes on it, I definitely take advantage of that.
I've heard in our community here in the Chicago real estate investor community that like some of these south suburbs, for that same reason that you're talking about with the taxes, are a little bit risky. And I'm curious to know, have you owned property there longer than a year and or gone through successfully any of these reassessment battles with any of these properties yet that you own?
I have trying to think, when I was with iCandy, we did a couple of them. Well, I did it on my own house. I think that was the first one that I ever did, which is in Frankfurt. It's unincorporated Frankfurt. I bought it and did like a huge gut rehab on it. And so I got it for a pretty low, it was a foreclosure, so I got it for a pretty low price, and I challenged it right away and was able to reduce the taxes by like a third of what they were. And then after the rehab, they did a reassessment. I think it's every 3 years that they reassess it. And they did come back up when they reassessed it and saw that, it was totally rehab. But at least I saved for a few years on the taxes. So I haven't on any of the rentals that I've purchased in the last couple months. I'm working with this attorney who's working on it, but it can be kind of a several month process. In Cook County, there's certain times a year that, depending on where your property is located in Cook County, you can submit for a tax reassessment. So it'll like open up for a couple month window for a certain area, and that's when you can submit.
Yeah, I mean, I literally just the other day had a friend, we were at a networking event, and she was telling me that they had a house in a $180,000 neighborhood is where one of the other properties sold. I think it was in Country Club Hills. And she said that the taxes on her property were like $11,000 a year. And I'm like, my gosh, $11,000. And the rent's like something like $1,200, $1,400, maybe $1,450, something like that. So it's like literally 2/3 of her payment is going to the taxes, and she has this property paid off. And they did try to fight the assessment, and basically the township, the village came back and said, oh no, this is an income property, so we're not going to work with you on the assessment. Since it's owned by an investor, you don't qualify for like a homestead exemption or anything like that. So that was why I asked that question, because I was literally, I'm kind of like hearing that and I'm like, oh my gosh, like we had another situation too unfold in that same area, although I don't recall which village it was. And we had like taxes going into the deal right around $4,000, $5,000 a year. And then like the day before settlement, I guess they had lifted the senior exemption as they were trying to get it through the process of probate and get us the deed when we were going to settlement. And the taxes jumped from like that 4 or 5 range all the way up to like 9,000. It was like shocking to see how quick the taxes popped up, and it seemed to be a little bit of a big risk for landlords buying in that area. And it's a shame because those high taxes will keep out sometimes people who are going to come in and provide sales in an area. It's like some of these villages and townships and things of that nature, the governments kind of do things and maybe they're gearing toward, hey, we want this to stay like a home ownership community and we don't want, too much of a Section 8 going on in a neighborhood. But what happens sometimes is kind of like a reverse effect, and then all of a sudden you see a neighborhood that doesn't have the same liquidity. So like when somebody has to sell a property that hasn't been renovated and they have to sell it to an investor, the investors are then turning around saying, wait a minute, I got to pay $4, $5, $6,000, $7,000 in taxes per year. The numbers don't make as much sense. So, in the past, in a good situation, maybe that person would have gotten $40,000 cash for the property, but now, because the taxes, or they put some kind of other restrictions on rentals or things of that nature, now all of a sudden, instead of getting $40,000, like the same seller's lucky to get $10,000, $15,000. So like, I think it just negatively impacts sometimes the government structure, what they're trying to do, and it really hurts the values and hurts the homeowners anyway, even though it was like the opposite effect. And I know that was kind of a tangent, but I just kind of was like triggered by us talking about the taxes there on the south side.
No, and I know that you can, as an investor, challenge the taxes. I don't know what the situation was with the person you're talking to, but I know on one in particular that we did with iCandy in Glencoe, it was a $1.6 million sale, and the taxes on it were in the high 40s, high 40,000. So it was like $48,000 a year in taxes when we bought this thing. And so we bought it and challenged it right away. And by the time we sold it, it was an enormous project. But by the time we sold it, it was about half that. So, and it was,
nice.
It was investment property.
Is this program a national thing? I imagine this is not just restricted to, Cook County, right, Kirby?
Right. Yeah. Yep. It's national. Obviously, in the urban areas, you're going to see it more. There's going to be more of a need for it, but it is a national program.
I mean, if we have somebody listening who's interested in this and saying, yeah, you know what, I have, these units, this is something that really I resonate with this, and I think I could do this as well. Maybe there's some other veteran real estate investors or people who just want to help serve those who have served our country. Is there somewhere that you can direct people to kind of get like some more information on this or any of the other programs or just this general niche in real estate?
Sure. Yeah. The way I got the point of contact for this program is I wanted to learn more about Section 8, like the ins and outs of, I think Section 8 can be a great program too if you know all of the details, because there's a lot of red tape around it and a lot of T's to cross and I's to dot. So I went to Section 8 offers, the Housing Authority offers these free classes on Section 8. So I went over to Harvey and sat in on one of these classes, and they just explained step by step how it all works and what paperwork you need and what's, legal, what's not legal. So if you want to do Section 8, I highly recommend getting the information right from the source, because there's so many people that will tell you, oh, I heard this and I heard that, and there's so much BS out there. So really asking directly from the person who's running the whole program is really beneficial. And so when I was there, I had heard about this VASH program and knew that the VA worked with the housing department. And so I asked about it, and they said, oh, it's run by Jessica Wilkie here in Chicago. And so I contacted her. She's at the VA, at the Hines VA Hospital is where her office is. And her team, she's got a whole team that works for her in this program, and they specifically provide the vouchers. So you can just go online and look at VASH, VASH. I forget what the initials stand for, but that's the initials for this program. And you can find out who in your area runs it, or you can go call the local housing authority, and they'll, point you in the right direction too.
I'm going to switch gears here in a second, but do you have any other final thoughts on the VA HUD BASH/Veteran Homes program?
Yeah, just some advice. So if you're planning to get into this program, or really any rentals, that I've rented for the last 10 years. I've done rental properties in different markets. I've got a rental property in Hawaii, I've got some in Texas, and I've got some here in Chicago. And they're all different types of properties, but the main thing that leads to success is being super proactive. I send an invoice to my tenants on like the 25th of the month. I do a lot of the stuff that Joe Nielsen talked about in your one of your first podcasts that you did, a real old school guy. I loved listening to that podcast because it was just super practical stuff that has led him to a ton of success with rentals. And I would highly recommend listening to that. But I do a lot of the stuff he talks about, and it's all about being proactive. There's so many people that will just throw a tenant in there, sit back. They don't do inspections. Every quarter, I'm going to walk through the property with the tenant, and inspect how they're living and make sure that it's not falling apart. I'm addressing any maintenance issues, and I'm communicating with them. And that is by far the difference between success and failure as a landlord.
I'll put a referral link to Joe Nielsen's episode as well with Kirby's previous episode in the show notes. I thank you for the insight on that. And you have made a philosophical switch as an investor that I've noticed over the past year, and you briefly touched on that in our introduction here. But primarily, it was like a high volume house flipping, buying houses for $1.6 million, like just these like wild numbers. And I kind of want to talk about a little more, if you could just touch on that. So here was how I got into the business, Kirby. I was like broke. I had only ever experienced like the check to check existence. I had never had a chance to really save like a nice nest egg by any means when I got into business. And I know a lot of people get into the business and feel that way. And I remember feeling like, oh my God, if I could just flip a house, it would be like just this humongous amount of money, and it just will feel like so much problem-solving ability to have that check from flipping a house, whether that was a $15,000 profit or a $45,000 profit or a $100,000 profit. It still felt like $20 million to me getting into the business. And I know like a lot of the early deals I had done for the first couple of years still felt that way getting into the business. And so I know a lot of people are like kind of relate and say, well, wow, flipping houses is just the end all be all. That's like, where that's the pot of gold at the end of the rainbow. And you've done that for several years. I mean, can you just talk about what that was like and kind of what led you to kind of want to switch and pare down on the expenses, and now you're doing something completely different with not a lot of overhead? Would you just talk about that transition a little bit, Kirby?
Yeah, it's a great question, and probably a lot of people listening to this are going, yeah, it seems like a huge step back from, having this big company with employees and, doing these $1 million rehabs and all that. But it's, like you said, it seems like, that could just solve the problems if you just do bigger projects with higher profit margins or more nominal dollars in the profit margin, not necessarily a bigger percentage profit, and you just do more of them. Obviously that should lead to more profit, and it can. But if you look around, there's not a whole lot of rehabbing companies that are massive companies. Like there's not many that are like nationwide rehabbing companies, that are just doing this at a huge scale, because it's a tough thing to scale. You start adding tons of properties. So we started growing and we started adding a lot more properties. At one point, I think we were doing 26 properties at one time, 26 rehabs, but not all in rehab, in rehab at once. Some were under contract to buy, some were under rehab, some were on the back end to sell. But there were a ton of properties. We had $12.5 million borrowed for these properties, and there was so much going on at once that, we had a team of like 12 people when we had, at our height in eye candy, but it's still so much to manage even with 12 people, because you're managing the people, and so I wasn't out visiting properties too much anymore. I wasn't out in the field. I wasn't doing scopes of work or talking to contractors. It was all people management. And I got to a point where, it's real easy for your business to become like a self-licking ice cream cone, where you have to do the volume to support the overhead. Yeah, so you got to do enough marketing to keep the lead coming in, and then you've got so many leads coming in that you've got to hire more people to manage all the leads, and then you got to do more deals to pay those people. So it becomes this perpetual cycle of, and that's how businesses grow, but you have to be pay very close attention to the details, especially on high-end rehabs. And so to pay very close attention, you've really got to be on site, and you really got to have your hand in each deal. And it's not something you push an autopilot button and just hope $1 million property turns out right. It's daily communication and project management. So, you can take a deal that should be a fantastic deal, and by the time it's done, and by the time a very picky high-end buyer goes through it and does their inspection and demands all the changes that they want, your margin can diminish quite a bit. So especially if you're doing so much volume that it's difficult to, keep your hand in the details. So, I got to a point where I wasn't enjoying it as much as I used to. It had changed a lot for me. And so I wanted to get back to kind of why I started getting into real estate in the first place. And I really admire some of these old school guys that, they are the ones doing it on a daily basis. They keep their overhead low and they build it the right way. They put the money that they make right back into the business or back into the properties, paying them down. And, during the 2008 crash, you didn't hear about those guys getting crushed. You heard about all the guys who were just trying to, play cowboy and do a million deals at once and were pretty reckless. So not to say that that's where we were, but that was, I felt that there was more of what I had a passion for doing what I'm doing now. And I feel like I'm helping some people who, who need it the most. If I rehab a house and sell it to somebody who it's their next, they just moved out of their starter home and are moving into a higher end home. It's helping the economy. It's helping them. It's doing good. But if I can help a veteran, especially because I have a heart for veterans, if I can help them get off the street and get back on their feet, get a job, maybe eventually buy the house that they're renting, I feel like that does a lot more for our economy and for, just makes a bigger impact in general than what I was doing before. So my sense of purpose has just gone up so much, and my desire to get out of bed and do it every day is through the roof, and I really enjoy it.
Yeah, I mean, you touched on talking about the risk of, big properties, and it's funny, like I see people doing large amounts of deals, and I'm sure there's money being made, but by the same token, if there's not still enough profit margin there and you're not putting enough money aside, by the time you pay your taxes, I mean, you get caught when the market turns and you're holding on to, 26 properties at the high end. Like, it's not uncommon for 25% of value to vaporize what feels like overnight. Like, I've lived that and watched people go down in flames when they're a little bit overextended. So certainly something to be said for being a little more conservative, especially as we're getting further and further into this hot, frothy market that we've kind of been in for the last couple of years with record-breaking prices in a lot of neighborhoods and things like that. So, yeah, I mean, the risk of growing is certainly, I guess that's why there's apparently more reward maybe on the other side of that. But that's cool. So, Kirby, I'm going to ask you this question because I heard you touch on this as well in there. Who would be the most successful real estate investor / developer in your eyes? They can be somebody that you personally know, dead, alive, maybe you only know them publicly, but the important part of the question I'd like you to answer is why you believe that they are successful.
Yeah, that's a great question. There's a lot of them. Like I admire the people who are like out there, doing it on a daily basis. They're not the guys that, I get in the beginning, I thought I admired, the people who, were standing in front of their Ferrari saying, sign up for my class and I'll show you how I became a billionaire. And then you look a little deeper and you find out those guys can barely pay their bills and are just hoping to sell enough classes to make it to the next month. And the guys that are really doing it and doing it well are the guys that are out there actually not necessarily in a seminar. They're on the meeting with sellers on a daily basis, and they've got their hands in it. So there's a lot of them here in the market, in the Chicago market. You're one of them for sure. That I remember meeting you at your first RIA that you did, or your first meetup that you did here in Chicago a couple of years ago. And, I was just so impressed because you're talking about like tactical tips on like, this is how you get the deal. Like you could tell you're doing it daily. Like, it's not like you're saying theoretically, just tell them this and tell them that. It's like, these are the exact words. This is where you should stand when you talk to the seller. This is like, it's detailed stuff. Frank Montrose, another guy that's doing it on a daily basis. Steve Carr, Josh Inglis, the guys at iCandy, they're still doing it on a daily basis. Kevin Hudova is another realtor that I met when I first started, and I've worked with him ever since. He's a guy that is a hustler, Steve Budzik. So a lot of these people in this local market who have sustained for the last, 4 or 5 years or 10 years or 15 years, some of them, they've got the staying power because they've got that stick-to-itiveness. So that's what I really admire about them.
I appreciate the kind words. I know you just tucked that in because you're on my show. I get it.
Trash mouth you later.
Yeah, that's cool. I agree. I know a lot of the same people you just mentioned, and one of the reasons I know people tune into the show here, the REI Diamond Show, is because I'm not selling coaching, I'm not selling seminars. I even get requests every once in a while. Hey, is there somebody you can point me to teach me wholesaling? And honestly, it's like I would love to put together a little class and get everybody together, have them fly to one of the cities that I'm in, but I'm so busy like doing deals. Like I'm on this call here and I see my Podio account clicking with notifications. We got offers going on. There's people in living rooms. I have like phone calls coming in from my guys who are in the middle of negotiations. So, like literally as we speak, it's hard for me to even set aside the hour, let alone, a couple days and then the planning to really give people the value they deserve when they pay money to come to a seminar. Kirby, have you read any good books lately that you'd want to recommend to the listeners?
Yeah, for sure. I'm kind of a podcast and audiobook junkie. I'm listening to them constantly when I work out or in the car. But yeah, I go back and forth between, and I think this is something that all investors, if you're new, you really need to do is pay attention that, you know, there's tactical books that you need to read to like learn the details of your day-to-day real estate operation, like how to of wholesaling or rehabbing or whatever it is you're doing. And I listen to guys, you know, like your podcast. There's some other podcasts I'll listen to for that. And then most of the books I read are more of like a strategic, like mindset. And I noticed recently that there's a theme, and when I look at all my audiobooks that I've downloaded, that they're all kind of like, they all focus on the same premise, I guess. So some of the books that I've read recently are The One Thing by Gary Keller. Another one is Essentialism. I actually read that a couple times by Ken McCown, I think is his name. The Pumpkin Plan is another one that's right. It's kind of like The One Thing, Eat That Frog. These are all books that I've read over the last year, and I didn't even realize I had this theme of downloading these type of books, but they all kind of focus around that idea of coming up with a plan and first figuring out what are your highest dollar activities and then coming up with a plan around those and executing that plan. And so that's kind of like, you know, from a strategic mindset standpoint, you need that aspect. And then you also need to dive in sometimes to the tactical level and, you know, understand the ins and outs of what you're doing on a daily basis and keep refining that and keep tuning it. So I typically use podcasts for that.
Do you want to mention a couple of those podcasts that you listen to? Because I'm sure everybody wouldn't mind checking them out.
Sure. There's a wholesaler in Arizona that has a pretty good one. It's like kind of the nuts and bolts. He does a lot of like case studies and stuff. Well, The Bigger Pockets is a great one. The Ultimate Real Estate Investing Podcast.
Sean Terry?
Yeah, Sean Terry. Yeah. That's one that's good for like tactical stuff. You know, the Bigger Pockets one. There's another really good one that I don't know if he does it anymore, but I listened to some of his old stuff and man, it's really good. I'm trying to find it. Oh, the No Limits Real Estate Investing. If you listen to some of the first ones that he did, man, it's really, really good stuff on negotiating deals. So those are a few of the ones. The Rental Income Podcast is a good one for landlords.
Nice. Appreciate that. If you could, Kirby, go back and tell your 18-year-old self and share the crown jewel of wisdom, what would that be?
I'd say probably create a plan, stick to the plan, and forget about what everyone else is doing or whatever anyone else thinks. You know, if you've got a plan and you're executing it, you can forget about all the shiny object crap, you know, and over time, if you're executing a solid plan, you're going to see some major rewards. It's the guys that are jumping around constantly that never see any results, and then they're the ones that say that real estate investing doesn't work. So just create a plan and know that some days it's going to suck and some days it's going to be awesome, but just stick to the plan.
Nice. Good advice there. So do you have some information, contact info, a website, anywhere people can get more information about you, Kirby?
Yeah. So we've got a website, greenbethomes.com, or there's a Facebook page, Greenbet Homes, Facebook page as well. So you can go there. I've got a web form there you can fill out, or you can email me at kirby@greenbethomes.com. I respond to all my emails. So feel free to reach out anytime.
Nice. As always, it was great having you on the show here. You shared a lot of great information once again, so I appreciate your time, appreciate you coming on.
For sure. Yeah, thank you.
Cool. And we will, there were a couple mentions, I believe Steve Budzik, Josh Inglis, Frank Montreux. We mentioned those names a few minutes ago in the episode. I'm going to make sure that we tack those into the referral links as well. So if anybody wants to check out some of the names, some of the people Kirby had mentioned there, we will include that. Well, Kirby, I'll catch up with you soon. Thanks again for coming on the show.
Thanks a lot. I appreciate it.
Thank you for listening to this episode of the REI Diamond Show. Have you noticed that you are not receiving the weekly episode updates in your email anymore? In order to cut down on the number of emails that I am sending to my buyers list in each market due to the high volume of deals we have, I've currently decided that I will only email select episodes to each market. In fact, you may go weeks or even months without seeing another REI Diamond Show episode email unless you sign up at www.reidiamonds.com. You'll also receive new episode notifications automatically if you've subscribed through one of the podcasting apps such as iTunes, Google Play, or Stitcher, where we are currently listed. Do you have deals for sale, or are you currently looking to buy profitable real estate deals? Either way, you can submit deals you'd like to sell or check out deals that I have for sale in Chicago, Atlanta, Florida, or Philadelphia by going to www.reidiamonds.com and clicking the link at the top of the page. Finally, if you have certain questions or topics you'd like me to discuss on a future episode, or if you have a guest suggestion, someone you'd like me to reach out to and invite on the show, you may contact me by clicking the Contact Dan link at the top of the page at www.reidiamonds.com. I do personally receive, read, and check my email and check form submissions, so that is the best way to contact me directly. Peace. Dan Breslin here. Catch you on the next episode.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.